Numbers this morning, and you're also seeing the first pre-open rates hit on your screen, but we'll return to them once they settle a bit. Natarajan Srinivasan, MD of CG Power, is with us. Mr. Srinivasan, very good morning to you, and thank you for speaking with us on NDTV Profit. Great to have you here. The initial sort of brokerage notes on the results are fairly positive. I just want to understand a bit, just if you can give me a sense on where that margin pressure is coming from. On the year-on-year numbers at 12.95%, and details of the exceptional items which has caused that net profit to fall.
So we have 4 businesses reported into 2 segments. One is motors and railways. We club them together as an industrial. The industrial, I think this year, the margin pressure is coming from motors business. Railways is doing okay. Then the other business is actually power systems, where we have the transformer and switchgear. Both the businesses have done exceedingly well. In fact, for all the businesses other than motors and for the company, margins for this year has been the highest. All the businesses have some record or the other in terms of sales, profits, or order book. Or margins. The year-end order book as of March 31, 2024 is 45% higher. It's about 6,275 crores. Coming to this extraordinary, we actually sold one of our subsidiaries in the US. Actually, this happened in the first quarter itself. That income has been booked there. Then that is the main chunk of the other income.
Right, Mr. Natarajan, over the last 3 to 4 years, you have actually undergone a lot in terms of transformation. Of course, picking up from your acquisition back in the day, then turning it around, becoming profitable eventually, and now showing a staggering growth as well. But now that we have normalization in place, would about 15 to 20% growth expectation be a reasonable one going into the next few years as well when it comes to revenue?
I think that is quite reasonable because, of course, for the immediate year, I think I have already mentioned to you that we have a strong order book on hand. So I see a clear visibility for the entire business. Railways has got huge plans. And we are one of the strong suppliers for railway. That segment is expected to grow. Power segment, both transformer and switchgear inquiries are very strong. I think the demand in the power sector will remain at least for 5 to 7 years, and according to some, it is even for 10 years. So I do expect the company to grow a minimum of in the range of 15 to 20%, and we are expanding our capacity. So that will also facilitate growth.
Mr. Natarajan, just in terms of the near-term outlook, do you think that the first quarter would be potentially a slow one because of the impending elections, the general elections that we have, and then eventually do we expect a pickup? Perhaps if some sort of a warning for investors to take into consideration the long-term and not just the short-term here?
So we don't give quarterly estimates, but for the year as a whole, I am confident of growing the top line by 20%. And then if there are no spike in the material cost, material cost is 70% in all our businesses. Of course, some we have protection to pass through, some we have price variation clause. Barring that, if there are no huge hike in the material prices, the margins can also be stable.
Mr. Srinivasan, just want to understand a bit about the railways side of things. You've seen the railways revenues to grow up to 40%. There is already a lot of orders that have been deployed by the government before the elections. I'm just wondering how much of an upside is there in terms of railways for CG Power?
So I think that whatever I have mentioned, that 40% actually will capture the entire what we can do, because even if you get orders, what you can execute during this year, that will be a challenge actually. So we may get orders. We are talking to several other the players who are executing some large contracts. We may get some contracting orders, plus new orders also may come. But for this year, I think beyond that to execute, I think we can't clock revenue higher than this.
Tie up with a Korean company in this segment. Anything that you can share with us on this, Mr. Srinivasan, because that is obviously being seen as a big positive as well. What kind of a collaboration will this be?
So it is actually a sort of some gap in the propulsion systems, which we will be getting it from them, the technology. We will be paying outright and then buying out the technology. After that, we will become a complete full-fledged player which can offer the entire scope of propulsion.
I just wanted to get your sense on the OSAT segment as well. I mean, that is, I would say, a little, not blue sky, but new and exciting. Is there any clarity that you have in terms of when and to what extent revenue contributions will come in?
Well, the project itself will take about 4 years to get complete. The entire project to get completed, it will be 4 years' time. So at the fourth year, probably we may get some revenues, but I think it's too early. After 2 years, when we are nearing completion, we can talk about that. It's a large project which we have to execute very efficiently without any time and cost overrun. Our focus will be only on that.
Is that a segment that you want to increase your focus on in OSATs?
So I think this project first is to complete this project and get the revenues. When this project gets completed, it has a potential to add our current, whatever we are recording as a turnover this year, that can get added to the company. And we hold, as of now, we hold about 92% of the equity. As per the agreement, our collaborators will put about 8%. So it will be a large addition to the CG standard current operations. So first that project has to get stabilized, then we'll see what opportunities will throw open at that point of time.
Sort of a ballpark figure or idea to how revenue accretive this segment will be?
So I have already mentioned that the turnover, minimum turnover could be about when plant gets operated at 80-85% capacity, maybe about 7,000 to 7,500 crores of turnover.
Okay.
And then sales PBT of at least margin of about 10% is what we are targeting.
Thank you for that, Natarajan Srinivasan, MD of CG Power there. Speaking about their numbers, there's a one-time sort of deferred expense which has reflected on the bottom line, but the outlook as per the Nuvama note pretty positive. I just want to pull up what that stock has done pre-open. You're seeing a bit of pressure there coming in. Pre-open rates are pretty much settling, and you're looking at perhaps a flat start for the Nifty this morning, though in the green. What's working? BPCL having a good day. Look at the, maybe Titan will have a bit of a recovery today. Hindalco, interesting note out there from Kotak looking at Hindalco